Boy, oh boy, there is a lot of noise about market manipulation. Is Keith Gill, RoaringKitty, deep effing value, a market manipulator? In this video, I'm going to give you a securities insider point of view of how an argument could be made that Keith Gill is a market manipulator. But first, I'd like to ask you this. If Keith Gill is indeed a market manipulator, then I have to say, so is every person in Congress who gets to hide their trades for 45 to 90 days, every hedge fund or short seller who posts a research piece on Twitter or social media and says, this company is a scam. Meanwhile, they have weekly put options on it to profit millions of dollars. Then every single institution on Wall Street who has a thesis and places a bet on it and then uses their clout, their name, Barclays, Goldman Sachs, JP Morgan, then every single firm in the country that argues for or against a specific stock is a market manipulator. Now, that's my opinion, but I'm going to show you where the argument could be made if they really wanted to press it, as to how Keith Gill could be deemed a market manipulator. Now, I want to be exceptionally clear. I think what Keith Gill is doing is, frankly, free speech, social media influence, doesn't matter, good for him. But I think you have the right to share what positions or trading ideas you have, just like any hedge fund, any short seller, or any institution, or quite frankly, the congressmen and women who constantly outperform the market. With that said, let's go into how the securities industry actually works. First things first, there are a lot of folks referencing the E-Trade potential of kicking Keith Gill off the platform. All right. First of all, this is a terrible leak from E-Trade because this could lead them to get canceled by social media. People love Keith Gill, and this is a very stupid and bad PR move for E-Trade. Sorry, E-Trade. This is a big oopsie doopsie. Now, why would E-Trade do it? Well, E-Trade would do it because as a broker-dealer, they are responsible to regulators for making sure that their clients aren't manipulating the market. So if FINRA can allege that E-Trade is failing to supervise Keith, then E-Trade could lose its broker-dealer license and go bankrupt. So there's a lot at play here. Now, there has been a fine related to Keith Gill in the past. In fact, if you scroll down, this has been talked about a lot. Back when Keith Gill worked at MassMutual, mind you, he holds a bunch of securities licenses. In fact, we talked about this over at ehack.com. We talked about, I think he has a Series 24, which is actually a pretty tough one. Yeah, here it is. He has a 63, 65, 7, 3, 24, and the SIE. It's interesting. I have the 63, 65, 7, 24, 27, and the SIE. I don't have the 3. But anyway, very interesting. Some of these are actually very hard licenses to get. But there's this talk about how MassMutual agreed to pay a $4 million fine back in 2021 to settle an inquiry from state regulators about market manipulation potentially. But when you actually go into the details, it's not because Keith Gill was deemed to be a market manipulator. It was because of a failure to supervise Keith Gill. And now this gets really arcane, and I'm going to make this very, very simple. Let's say the speed limit on a highway is 65 miles an hour. And let's say you wrote down that I promise not to go over 55 miles an hour. And then you get pulled over for going 64 miles an hour. In the world of driving, did you violate the law? No. It doesn't matter what you wrote down. The law is 65 miles an hour. You didn't violate the law. Fine. You follow the rules of the vehicle code. Fair game. In the securities industry, if the rules of the security industry applied to driving and you wrote down, we will not go faster than 55 miles an hour, and you went 64 and got pulled over, did you violate the law? Yes. See, in the securities industry, when you have a manual and you say you're going to do something and you don't do it, you violate the law. You have to then pay fines, or you potentially get kicked out of the industry. That's really bad. And so that's what happened when Mass Mutual was fined $4 million. They say here that the firm had a policy against employees discussing securities on social media, but they didn't actually monitor Keith Gill's social media activity. Now, they could have avoided having to pay that $4 million fine if they didn't have a policy prohibiting their employees from talking about stocks on social media. So they kind of fell on their own sword. That's their fault. That's not Keith's fault. So just because there was a fine in the past does not mean Keith Gill was at fault here. Okay, interesting. So where is the potential argument that Keith Gill could be a market manipulator? All right. Well, first, let's start with the easy one. If you just Google market manipulation, you get a very, very simple description from the SEC, and it's spreading false or misleading information about a company. I don't believe what's happening here with Keith Gill at all. Engaging in a series of transactions to make a security appear more actively traded. This is called painting the tape. It's basically when you're, like, let's say, not that it would make a difference to Apple stock, but let's say you had 100 shares of Apple stock, you bought it, and then you sold it. That's 200 shares of volume. Then you did it again. That's 200 shares of volume. Again. You create like 1,000 shares of volume with no intention of actually having 1,000 shares of volume actually being there. The only purpose is to create volume for the purpose of creating volume, which is a scam. That's not what appears to be happening here. Rigging quotes or prices or trades to make it look like there's more or less demand for a security. That's not what's happening here either. Microcap stocks are more susceptible. Okay, well, those are stocks between $50 million to $300 million. You can actually see that right here. But that's not what GME is. So you go to GME stock, you got an $8 billion market cap. So 8.5. So that's not what's happening here. Okay, so if we go to then FINRA, you could go to FINRA, new rules for 2023 manipulative trading. We're going to read these in reverse order. Okay, manipulative trading schemes. So in reverse order, what are manipulative trading schemes? Prearranged trading. That's when you promise to rebuy a security at a higher price. So it's like, hey, buy this stock at $20. I'll rebuy it from you at $25 to make a commission or whatever, like guarantees basically. You can't make guarantees in the securities industry. No, that's wrong. Wash sales. Again, this is very similar, and you can just look these up. Wash sales, FINRA, but it's basically making trades that have no legitimate purpose. They're very, very, very anti stuff like that from happening. And algorithms can do that, creating wash sales for basically creating traffic to make it look like something is more active than it really is. Spoofing is pretty similar. I believe these are just fake trades. A form of market manipulation in which orders are entered with the intent to create the appearance of a buildup of selling or buying pressure. Exactly. Trading ahead or front running. Okay, this is a little complicated. An individual is allowed to make a trade and then tell people about it. There's nothing against that rule. Remember, or there's nothing that says you can't do that. Think about Bill Ackman. He has a short position and a long position. His short positions were probably weekly call options, weekly put options, and he goes in and tells CNBC that everything should be shut down for 30 days to slow the spread, and the stock market tanks, and he picks up billions of dollars. You can't insider trade on your own information. Like, stuff that's going on in your head is not insider trading. Insider trading would be like Jamie Dimon calling up, or I'll use another example. Elon Musk calling up JB Dimon over at JP Morgan, and Elon Musk going, yo, I need to dump $20 billion of Tesla because the stock's about to tank because we're about to miss deliveries. Let's do it in a 10B plan or whatever, an employee sale plan, so it makes it look like we're not dumping and insider trading. And then, first of all, that would be illegal. But then Jamie Dimon tells everybody at Chase, yo, guys, sell Tesla. And everybody at the company starts dumping Tesla. That's trading on the basis of insider information, right? That's also front running or trading ahead, because they'd be able to trade ahead of Elon Musk's, stock dump plan. That's not what's happening here. Layering is another one of trying to create this sort of like fake order information. Layering is a form of market manipulation which multiple limit orders are entered onto one side of the market at various different prices to try to create the impression of activity. That's not what's happening here. The only one that you could potentially argue is this right here. Momentum ignition trading. Now, the easiest defense to momentum ignition trading is, hey man, look, when I posted that I made a buy, the underlying stock didn't move at all. This is one of the reasons that I like to trade in stocks that are larger. And I think this is a very important rule if anybody's trading on social media. It's probably something people should regularly do, is just focus on larger companies. Ideally, $500 million market cap plus. But again, GameStop has a market cap of $8 billion. But in the case of Keith Gill, because he's the face of GameStop, let's be real. He's got a position of 140 or 120,000 contracts at $20. These contracts went from $5 to $16 at market open yesterday. They're only worth about $10 now. It doesn't look like he sold any as of yesterday. And the stock was up 21% after he posted on social media. It could be argued that there was momentum ignition from Keith Gill. Now look at the actual definition of momentum ignition. Momentum ignition, not this layering or spoofing. It would be this. Transactions in cross-product securities. Okay, well, this is a little bit complicated here. Cross-product securities or cross-product manipulation. This is a little tough one. Cross-product manipulation is the practice of placing orders or trades in one instrument with the intention of illicitly impacting the price of an instrument on the same trading platform or a separate one. So, for example, a trader could trade an equity to impact the price of a derivative contract. Okay, this is really very complicated, but imagine this. Let's say you have a bunch of options and then you buy a bunch of the stock, so that pumps the stock price potentially, which then pumps the derivative price at a multiplier effect. That's cross-product manipulation. Really dangerous. One way to avoid allegations of cross-product manipulation is, in my opinion, don't do cross-products. Don't do shares and options. Well, Keith has both. He has shares and options. So that is a cross-product. That's not great. I know this gets arcane, but which manipulate, this is hard. You'd have to prove that manipulate the underlying price of the security. But again, 21%. It was up 75% in pre-market. Clearly, people are going to follow this here, right? Thereby influencing the price at which a market participant can either establish or close a contract. So now Keith didn't close yesterday, but when he closes those contracts, there could be an argument that he did so on the backs of other people who went into it because he went into it. And see, there are many different websites that sort of define this. Momentum ignition. Let's do momentum ignition trading. This one had an interesting, more simplified definition. Entering orders likely to start or exacerbate a trend and to encourage other participants to accelerate or extend the trend, to create an opportunity to close out or open a position at a favorable price. So this is dangerous. Again, the way to avoid this, in my opinion, is by making sure that when you trade, the underlying stock isn't skyrocketing solely because you entered. So for example, I make trades all the time. Sometimes I buy a stock, like I'll buy calls on Tesla, and the damn thing just tanks right after. Well, then I'm like, all right, obviously I know I'm not influencing the price of Tesla. I had no expectations either of influencing the price of Tesla or frankly, any of the stocks I trade. Like I generally trade Nvidia, Tesla, Enphase. These are big companies, Supermicro, Computer, Nvidia. I don't actually think any of the trades that I make affect the underlying price. And I'm not doing cross products or whatever. But when it comes to momentum ignition, what you're really doing is you're creating an allegation. And could FINRA or the SEC make the allegation that Keith Gill's posts on social media encourage others to get in so he could pump his portfolio? Yes, absolutely. Because not only does he have cross products, the shares and the options, but it's really easy to go, here's when you posted, here's what happened to the stock price. The best way to avoid that would be to say, hey, look, here's something that's really liquid that isn't moving off of our information. But in fairness, if that allegation is going to be made against Keith Gill, then why is that allegation not made against all of the short sellers or hedge funds, who can post articles that say, hey, we think this company's a fraud? Then they've got a bunch of position in that company, and then all of a sudden the stock tanks based on what they posted, which you could argue you're igniting momentum. Now, it's also possible, though, that the loophole is, hey, well, they're doing that under the, research guys. So, like, hedge funds or institutions might be like, hey, look, we're not telling you exactly what trade we're making. We're just saying we think this company is a scam. We're not saying, oh, we're buying, we're short this amount or whatever. That might be a loophole they're using that Keith doesn't have the benefit of when he only posts his shares. So maybe a way to avoid the allegation of momentum ignition is to say, hey, here's a fundamental thesis I see. I see this stock is making this potential trend. Here's, the longer term fundamental analysis or the technical analysis. And there's sort of this avoidance of, here's just my, $120,000 or 120,000 contracts. Thumbs up. So the allegation does probably have some merit. Do I personally think it would be fair? No. But I do think there's a lot of cleanup that could be done by regulators to make it very, very clear to firms and institutions, hey, when is something considered igniting momentum or not? Is posting an opinion momentum ignition? Or is that unfair to people who have more influence, like a Keith Gill? I don't know. Let me know what your thoughts are in the comments down below. I find it really interesting. Hopefully this wasn't too granular. And I hope that Keith Gill is A-okay. Thanks so much for watching, and we'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.